Hello and welcome to the Lighthouse Wealth Management Post-Presidential Election Analysis. I'm Henry Becker and this is Tom Kozlowski. And we're going to, in this video, walk you through a brief analysis of what we think the Trump election will mean to investors and the marketplace as a whole. Now keep in mind, we are going to put out a detailed report written on the same topic, and that should be out in the not too distant future. So with that said, we understand that this election was very contentious. But for us, as advisors, our job is to not look at things politically, more so look at the market and economy without politics in mind. Clients look to us to provide clear-eyed solutions to investing, economics, in the marketplace, and we do our absolute best to transmit that in our investment analysis and portfolios for our clients. So, with that said, I'm going to turn it over to Tom, and he's going to walk you all through the details of, some of the details of what we think the Trump election will mean to investors.
So with that said, we think that the election of Donald Trump and a Republican Congress is a real paradigm shift. The last several years have been characterized with a split government. And what that has led to is, without any fiscal reforms or fiscal policy going through, it's left the onus on the Federal Reserve to lower interest rates to try to stimulate the economy. Well, we think, obviously, with the election, that kind of changed overnight. So while we don't know exactly what policies, what the exact policies will look like, we do feel we have a good idea what direction they're going to go. And with that, this is what we see. Number one, interest rates and inflation we feel will be going up. We've already seen bond rates go a couple of months ago from a 10-year treasury of around 1.35 up to about 2.35. While that doesn't seem like a big move, 1 percentage point, in the world of the bond market, it's actually a big move. And this is negative for bonds, we feel, going forward. Secondly, we do feel that less regulation will help spur growth increases in the economy. Our GDP has been hovering right around or just below 2% for the last 4 or 5 years, and we haven't had that velocity to kind of get out of that slow growth area. We do think that if we have some regulatory reform, that will be pro-business and that we will see GDP pick up. Along the same lines, number 3, tax reform. Lower taxes are certainly stimulative. We think that if there is corporate tax reform, which aligns our country more in line with other developed countries, that you will see that be quite stimulative. Right now, it's estimated there's about $2 trillion of money that our corporations have offshore that have not brought it back, basically because they don't want to pay a approximately 35% rate. So if they do have some type of a tax reform which will allow that to come back, that's going to be very stimulative for the market as well. And then fourth, both sides of the aisle have talked right now about infrastructure spending. We've heard upwards of $500 billion to maybe even $1 trillion, and if implemented properly, if it goes through, that would also be a positive for growth in the economy. So those are a bunch of the positive things that we see out there. Now, of course, there's still a bunch of negatives. Number one, how would you pay for these tax cuts? Obviously, our debt right now is sitting at $19 trillion, and at least as proposed, the Trump administration has not given any way on how they would pay for these cuts. Also, not just the way to pay for them, but if we're going to borrow the money, that's obviously going to lead to a lot higher debt as well. And if interest rates are going up, that could be a negative for the economy longer term. And then the other issue that we see that hasn't been addressed yet by either side has been Social Security and Medicare. We all know that that's out there. Depending on who you listen to, we're anywhere from 8 to 15 years away from having a real crisis in those areas, and we do think that needs to be addressed. Otherwise, any of the gains that we could get from the tax reform or the stimulus could be negated. So the bottom line is, this is the most optimistic that we've been on the stock market and the economy in general for quite some time. with this new information, this new paradigm, we will be looking to digest that information and adjust our portfolios and our models going forward accordingly. And again, just because we're optimistic, it doesn't mean that the stock market's off to the races. There will be fits and starts, and certainly if a lot of what is proposed doesn't come to fruition, we're going to have to make some adjustments again as we see fit.
So as I said earlier, we will be putting out a more detailed report on the same topic, but as always, if you have any questions, issues, or concerns, feel free to reach out to us.